If Ofgem introduced quarterly review periods for the price cap, what impact could the more frequent cap adjustments have on consumer bills and also suppliers, including their hedging strategy?
As far as consumers are concerned, what you'll see is that movements in the wholesale market will be passed through more quickly than would otherwise be the case. We've had the instance over the last 12 months in particular of consumers seeing these really sharp steps in their bills as a consequence of the cap. What we'll see if we move to quarterly caps is, while the general momentum or direction of the cap will be the same, whether it's upwards or downwards, you won't see those steps that we've seen previously. For suppliers, it's a similar argument really. They'll be able to pass through changes in the wholesale market, the impact of their hedging strategy, faster than would otherwise be the case. I think potentially the challenge that they've got is they've adapted to hedging in a certain way with the seasonal caps. What Ofgem are proposing now is a change to that. And you've got the question of the extent to which the wholesale market as a whole is able to respond to that. Certainly for electricity, where you see a lot more trading in seasonal contracts than you do quarterly contracts. So there's that question of adaptation, both at a market level and also on individual supplier level.
What is causing volatility in the UK energy wholesale market, and how long do you expect to see the current levels of volatility which are causing instability for consumer bills?
As far as what we see in terms of both the absolute level of prices and the volatility in the wholesale market, that's something which we've unfortunately been experiencing now for well over a year. Initially down to a combination of supply-demand concerns ahead of winter 2021-2022, but this being exacerbated as a consequence of the Russia-Ukraine conflict, the implications of that on gas flows from Russia to the European Union, and ultimately how that cascades through at a global level to international market prices. Certainly as far as some of the uncertainty relating to immediate term considerations, whether it's things like weather, maintenance considerations, outages or other problems, they are things that they generally reflect the typical ebb and flow of the energy market, so they're pretty much the norm. Really what you have as far as the greater part of the uncertainty is concerned really relates to the Russia-Ukraine conflict and what the ultimate impact of that will be, both in terms of supplies in the short term and also in the longer term, given that we've seen statements from the EU that it wants to cease purchasing Russian gas as quickly as possible. So as far as how long this situation will last, given the drivers involved, it really is difficult to say. But unfortunately, based upon where the wholesale market is now and the general perception that's out there, it doesn't look to be an issue that's going to go away anytime soon.
When do you predict the price cap will start to decrease?
Well, what we've got in terms of the winter forecast and the Q4 forecast is a level of approximately £2,800 for a typical customer. Our forecast for Q1 2023 are broadly the same. It's still around £2,800. In terms of moving into the summer period, we're predicting a decline of around 10% on the winter cap for Q2, so around £2,500 a year for a typical customer. So there will be that extent. There'll be a decline to that extent as far as the cap is concerned. But in terms of when we see a more enduring decline and potentially a return to some of the levels of the cap that we saw last year or even earlier, unfortunately that's not something which is immediately on the horizon.
What can be done to mitigate the impact of high energy bills in the short term and stabilise the energy market in the medium and longer term?
As far as the level and structure of the cap is concerned, Ofgem's released a raft of consultations last week with a view to reforming the cap. As we've said, making it more market reflective, more adaptive and more responsive to what happens in the wholesale market. But that's something which can lead to both increases and decreases in the cap. As far as direct impact on consumer bills, that's very much an area for government, and we've seen the announcement today as far as the package of measures that the government is putting forward to try and address that and try and address the challenge of the cost of living crisis that consumers are facing. So it very much can be a case of seeing what government and Treasury's measures yield as far as direct impact on customers' bills and ultimately helping them to better afford their energy.